Google's stock is crashing. They just reported earnings and they had a very strong quarter. Despite this, the stock is down 7%. Looking at the past 5 years, the stock has doubled. So is it a good time to buy? Let's find out. In the last 12 months, they made $200 billion in profit. Everyone's saying how it's so cheap. Look at their PE ratio. It's only 17. But here's what they're forgetting to take into account. About 40 billion of those profits came from their investment gains in SpaceX, Anthropic, Databricks, and a bunch of other investments. If we normalize for these things, it's more like a 30 to 40 P ratio, significantly more expensive. But at the same time, cloud revenue is up 80% year over year, which is insane for a company as big as Google. With this kind of growth, you can argue that this valuation is justified. So why is the stock down? Well, it comes down to one thing. AI capex. This is what I mean when I say there's little room for error for these stocks. You could be posting record profits growing really fast, but if you're not growing as fast as Wall Street expects, your stock will drop. Add on to the fact that now Google is doubling down on AI, saying they need more money to fund their operations and continue this growth. And there's really only two ways to raise money, and that's taking on debt and issuing shares, diluting existing shareholders. And Wall Street hates this, but that's exactly what Google has been doing. In the last year alone, they went from 16 billion in debt ballooning to 100 billion now. And as far as issuing shares goes, I'm pretty indifferent to this because in my opinion, Google stock is expensive, so it makes sense to actually raise money at these levels. So is it a buy? Well, in my opinion, the core business is undoubtedly dominant. The only issue is valuation risk. At these levels, like I mentioned earlier, there's very little room for error for Google. So if there's even a slight downturn, this stock will come crashing. So here's my assumptions for the bull case, bear case, and normal case. All things considered, I think it's a bit pricey for 10% annualized returns. I think in a diversified portfolio, maybe you can allocate some funds to Google, but I wouldn't have a large concentrated position in it. But if you want to make your own valuation, check out Stockspill. It's free. And let me know what stock I should cover next and follow for more.